Hey guys, this is Money Value. My name is Olga and I'm back with some facts about Google. Does it make information about this search engine an autobiography if it's from Google? Anyway, let's get going. I don't see any point in discussing what this company is doing as you all are well aware of its practice. It's mainly about internet-related services and products. What I'm gonna mention later today while discussing the profit is Google Online Advertising Technologies. But keep in mind that it also does cloud computing, software, and hardware. As of 2019, its revenue is $161.9 billion and net income is $34.34 billion. It makes Google one of the 6 big tech companies, also known as Big Five. Google is one of the most successful stocks of the 21st century, launching at just over $50 a share in August 2004 before reaching a 2019 value of just over 1,125 Class A per share value. As of today, the stock price is 1,784 for Class A and 1,790 for Class C. If you Google stocks, you'll see a company called Alphabet. It was created through a restructuring of Google on October 2, 2015, and became the parent company of Google and several former Google subsidiaries. It was established because of the desire to make the core business cleaner and more accountable, and of course get greater autonomy. So, what do you need to know about their shares? First of all, there are two kinds of them traded publicly on Nasdaq under the tickers GOOGL and GOOG, standing for Google's A shares and Google's C shares respectively. Google's co-founders, the company chairman, and a few other directors own the firm's B shares, which do not trade publicly. And I promise you no history, but this one is kinda important. In 2014, Google split its stock, creating A and C shares. The split doubled Google's number of shares and cut the price in half. But what matters is that the holders of A shares get 1 vote per share, a C share gives no right to vote, and B shareholders, which are directors, co-founders, and the chairman, get 10 votes per share. It means they hold the voting power. Thus, Google lets investors buy large shares of its equity but is very careful about the control. In 2015, they realized that the company was expanding beyond its search engine roots, and Alphabet was founded. Larry Page, who was Google's CEO, got the role of running the new founded company. Here's what he said. Fundamentally, we believe this allows us more management scale as we can run things independently that aren't very related. Anyway, on January 16, 2020, Alphabet became the 4th US company to reach a $1 trillion market value, entering the $1 trillion companies club for the first time. It means they're doing everything right. By the way, here is a graph of their shares. As you can see, Google's share price have consistently increased. Oh, don't mind the March. There was a market crash that affected almost every business. As of early October, the 52-week low was 1,008 and the 52-week high was a stunning 1,726. With pricing like that, it's not surprising that some investors and analysts are worried. The most logical question here would be, why is the stock growing? Okay, we have two key reasons here. First, Google is holding its own in the cloud computing space, which is an area of massive growth in the tech industry. It can be explained by the fact that businesses all around the world turn to cloud-based computing. Obviously, Google is one of the top 3 providers of these services. Second, between cloud computing, the Google search engine, and other lucrative brands like YouTube, the company was well positioned to benefit from the impact of COVID-19. Stay-at-home and shelter-in-place orders made employees work remotely, and while people were isolated at home, more and more were looking online for safe, ergo social distanced entertainment. What it meant for Alphabet businesses? Well, there was an uptick in average monthly users, which translates into increased interest from advertisers. You remember I told you about Google ad businesses in the very beginning? Well, that's it. I'm mentioning it. And since I kept my promise, I hope you do something good too. For example, hitting the like button. From a longer-term perspective, Google stock has been on an upward trajectory because Alphabet as a whole is steadily increasing its revenue. From 2016 to 2019, annual revenues grew 71 billion, moving from 90.3 billion to 161.9 billion in just 3 years. What can I say? Investors like those figures. From 2018 to 2019, Alphabet grew its revenue by 18%. Though the company was well positioned to continue growth through economic challenges of the pandemic, there was a decline in advertising revenue. In the first half of 2020, revenues increased by 6%, which was lower than expected. Even though the users were more active online, the struggling companies couldn't afford buying as much ads as they used to. So this decline in ad revenue impacted Google's profitability and Alphabet's as a whole. From 2018 to 2019, Alphabet's net income increased 12%, but it went down by 17% year-over-year for the first half of 2020. Some investors hesitate to buy Google stock now, considering the drop in March and September. Since I've already covered March, let's see what happened in September. Many investors became concerned that share prices were a bit inflated. The thing is, Google faces struggles its competitors do not. Google has been the subject of intense scrutiny by a number of government agencies concerned with violations of antitrust laws. The European Union fined the company $1.7 billion in March 2019 for what it terms abusive practices in its process of brokering online advertisements for other websites, including blogs and newspapers. That was the third in a series of fines for various antitrust violations, totaling $9.3 billion. Some nations are weighing new antitrust proposals geared at reining in big tech. The Department of Justice on October 20 filed an antitrust lawsuit against Google. The Justice Department charged that Google has harmed competition and consumers by monopolizing internet search and search-related advertising. If the Justice Department wins, it could force Google to restructure. In addition, Congress may overhaul Section 230 of the Communication Decency Act in the hopes of reining in web giants. The law guards web publishers from liability over third-party content. Anyway, this case would take years to resolve. The eventual outcome could be a mandated restructuring of the business, which would have a substantial impact on the larger company from a financial perspective. So now your question must be, should I buy Google stock now? Well, it's costly, but it doesn't seem to be overvalued. Its price might not accurately reflect current market conditions, but it is indicative of expectations for the company's future growth in revenue and earnings. One more scale for you: accumulation to distribution rating. Google has a rate of B- here. That rating analyzes price and volume changes in the stock over the past 13 weeks of trading. The rating on an A+ to E scale measures institutional buying and selling in a stock. A+ signifies heavy institutional buying, E means heavy selling. Think of the C grade as neutral. On January 12, Google stock fell below its 50-day moving average, a bearish signal. Google stock trades about 6% below its entry point and is not a buy right now. This company has had its difficulties, and antitrust investigation doesn't make it any easier. Anyway, in recent years, Google stock typically keeps pace with the S&P 500, punctuated by brief periods of outperformance. So let's hope it goes through it. Thank you for making it to the end of this video. Don't forget to hit the like button, subscribe, and share this video with your friends. Thanks, stay safe, see you soon.